I have to ask you the question, are you complicating trading? Now, what I mean by that, are you over analyzing the market and doing something like I have on this chart where you've got all the stuff on your chart, but it's not helping you to make the right decisions? Are you getting frustrated? Are you getting to a point where you're not sure whether you should be buying or selling? In this video, we're going to go ahead and talk about how we can simplify it. So if you're struggling with that, pay attention. We'll be back right after this. Alrighty, traders. Well, I have one of those moments, right? And that moment is, are you kidding me? Well, let's take a look at the chart right here. Now, we've got a lot of information over here, and some of that information is useful, but a lot of the information is just noise. And all it's doing is complicating things for you. In this video, I want to go ahead and talk about how we simplify things, take what we need, but use it to be able to make good trading decisions. So pay attention. So this is the deal. We're going to firstly go ahead and clear up this chart, all right? Let's start off by clearing up the chart, taking everything that's on this chart right here off, and let's get started right from the get-go. All right, so let's do this. Let's go ahead and take off the trend lines. We're going to take off the smart patterns, fibs, all that good stuff. We're going to go ahead and clean up the chart so we have nothing. There you go. All right, so now we have a beautiful, clean chart. Now, traders, listen here. I've got an 8-hour time frame. This is the pound US dollar. We spoke about this in the trading room today. We spoke about the opportunity that's presented itself today on the pound US dollar for a buy. Let me show you how we're going to get in on this, right? So this is the deal. On the chart right here, this is an 8-hour chart. We can see that price is finding support there, support here. This is twice the market's gone ahead and found support. Now, the market could absolutely go back up to resistance right here and then go ahead and work its way back and then go back down again. But this is what we need to do. We need to find an opportunity to be able to get in on this. Now, I've already got in, and I'm going to show you where I got in. In fact, the price is, I'm going to write it down here, 2090 is my entry point. That's where I entered the market. And I placed my stop loss at 1944. All right? That's where I put my stop loss at. Now, we're going to go ahead and I'm going to show you how I got in on this. And by the way, I'm looking for price to move up to 25.55. All right? So 25.55, that's where I'm expecting price to move up. How many pips is that? That's around about 400 plus pips on that trade. All right? Call it 480. So I'm looking for price to move up to those levels. And this is where I'm going to put my stop loss right here. That's the stop loss. And this is going to be my profit taking right here. Okay. Write it down. Pay attention. So, how did I get in and why did I get in? Well, traders, I'm going to move this chart to a, we call it the sentiment strength line. It's called the SSL. I'm going to go to the sentiment strength line right here and I plot this chart open right here. Bring it up a little bit. All right. And so you can see right here, traders, can you see that? And let me do this first so I can let everyone understand exactly what's going on right here. If I go ahead and compress this chart a little bit like this, and I use my smart waves as I always do, and I plot it right from the top. All right, can everyone see right here? Can everyone see right here that when we had a wave 2 right here, right? When price moved from wave 2 to the wave 3, can you see right at the top here? Can you see that we had a blue candle and then a red candle? All right. Well, that red candle right there was an indication to go ahead and start selling. Then it moved down to my 1.618 right here. It moved into sideways consolidation. We had another bearish candlestick formation right here that took us from wave 4 all the way down to wave 5 down here. All right. Can you see the opportunity? Can you see how much pips we would have made down here? Don't have to know the exact value, but can you see how the opportunity right here as well as we started moving inside these waves? Now this is the deal. All right. The market has moved in a 5-wave bearish sequence. What do I expect when the market completes its 5th wave? This is what I'm expecting. I'm expecting price to complete a 5-wave structure like this, and then go into a retracement. So this is wave 1, 2, 3, 4, and 5. Once we complete the fifth wave, we're expecting price then to go into what we call an A, B, C correction, right? So I'm expecting price to start working its way back up here. Now this is the deal. If I'm expecting price, remember I'm still on the 8-hour time frame, change nothing over here. I'm going to go ahead and clean up my charts. All I'm going to do now is I'm going to go ahead and expand it up a little bit right here, and I'm going to look at when I have bull and bear signals. Take a look right here. Tell me, can you see that we had a bullish candle right here, which means a blue candle showing the market is going up? Can we see that price moved up? Can we see that price moved down from this bearish candle, and we saw price moving down? Yes, you can, right? Now, check this out. Remember I told you that we had support, and that the market's supporting there and the market's supporting there. We're expecting price to move up. Well, we just had a blue candle right here, which means a bullish candle. What are we expecting? We're expecting price to go up, all right? So let's go ahead and trade it. That's how simple it is. Now, how are we going to trade it? Well, traders, what I'm going to do is I'm going to go ahead and move to a candlestick chart right here, because what I want to look for is where's this lowest point right here. Now, yeah, we have a low point. I'm going to go ahead and find out where that low point's at. Check out the low. The low is priced at, there it is there. You can see at 119.57. So 119.57. I'm going to put my stop loss, let's say 10 pips below that. Let's put that price at 119.47. I put it at 44, but that's okay. That's where your stop's going to be. So this is where we're going to place our stop loss. Where we're going to go ahead and enter. Well, we're going to enter at market. I got in at 1.2090. Price trading at 1.2098. So it's 8 pips higher. All right. So your entry point will be then a little higher at 1.2098. Okay. Where are you going to go ahead and target? Well, target's going to be easy because this is what we're going to do with our target. All right. We're going to go ahead and take a look at the sentiment strength line right here. By the way, sentiment strength line is the same as the 3-line break. Now, if you're going to go ahead and do this, and I'm going to go ahead and plot in my smart waves, take a look and see where price is now projected. Price is projected to move to what level? It's projected to move to this wave 3 up here at the top. Where is wave 3? Well, let's take a look over here on the chart. If I look over here on the chart, and you'll see here, and let's get this listed here. You'll see price is expected to move to, let's just move that out of the way. It's expected to move up to 24.53, and then it's going to go up to 25.56. All right, 25.56. Now you can see those are the two levels we're expecting price to go to. Now what's going to happen here, traders, is that price is going to do this. Price is going to move in this format right here. It's going to go ahead and rally up here, then it's going to have a retracement, then it's going to go back up to this point right here. And at that point there, then I'm expecting price to move further down south. So at the moment right now, I have a 480 pip opportunity. Give or take a few because we're buddies, right? We've got a 480 pip opportunity for the market to move back up. Question here is, which is a huge question, is where do you place the stop loss? Right? Well, we know, we've already established. We said we're going to place a stop loss at 1.1947, right? That's where we said we're going to put a stop loss at. So if we place our stop there, what is the risk? Well, the risk is about 145 pips. Call it about 145 pips. That's the risk. And what are we chasing after? We're chasing after almost three times that. That's the profit we're taking. 3 times to 4 times that value. If we go all the way to the fifth wave, it's almost 4 times the value. So that means, traders, if you're risking $100, you are going to make $400 in profit. All right. If you go for the first target, you may make $300. So the risk-reward ratio right here is every $100 that you're risking, you can either make 4 times that or 3 times that. And that is important. You see, traders, getting in on trades and finding opportunities is easy. All right. And we have to stay consistent. But the most important thing, the thing that traders really struggle with is to be able to manage your positions and know when to get in and when to stay out. And the only time you want to stay out is not when you have a signal here, but when you have bad equity management. then go ahead and stay out because the risk is not worth it. All right? Or at least let's put it this way. The profit that you're getting is not worth the risk. All right? So that's what it is. Now, in this case now, because of the risk-reward ratios that we have and because of the amount of profit that we are gaining based on the risk that we're risking, the trade is worth taking on. So traders, that's it. I've gone ahead, let me go ahead and show you right here. I've gone ahead and entered this trade, and I'm going to show you exactly the details around that by just putting this over here, showing you the trade, and there's the trade right here. You can see here, there it is, and I'm going to hide that away. And you can see right here on this chart that we are chasing after the 1.27, which is all the way up here. So which means that price is, that's what we're looking for, price to move up eventually towards the end. But this is going to give us about a 300 and let's call it 70 pip move. Then we may pull back around about 80 pips down south. And then market's going to go back up again between 80. So we're going to go back up another, let's say 300 pips going up right here. So you could end up buying at this point right here. As the market dips down, maybe take some profit off the table there, then re-enter here again. And as the market goes up here, go ahead and close out all your positions at that level. And that way then, even though this may be a complete, let's say from the bottom right here to the top right here, this whole move could be worth, this whole move right here could be worth, let's say 480 pips. But by buying and selling, we could potentially make 370 pips going up, wait for the dip and buy another 300 going up. That could give us 670 pips instead of the 480. Much better deal. But traders, this is how simple it is. This is how we take a simple structure and put it together to find a trading opportunity without complicating things. Listen here. We don't have to make trading more complicated than it is, all right? And what we do is sometimes as traders, we tend to overanalyze. And when we do that, it gets confusing. Traders get frustrated. And all you do is you just make stupid mistakes. Trust me, I've been there. I've been trading for over 25 years, and I know where you're at. So traders, if this information has helped you and you like what you see, make some changes. But also go ahead and do me a favor and like the video, throw some comments in the video. Even go ahead and subscribe to the channel because I'd love to send some more information to you. And if you're a subscriber, you will get notified when those videos are uploaded. Thank you for your time. Have an absolute awesome week. And we'll see you next time in the next video. This is FX Big Dog. Say cheers.